Alright, so I just wanted to come across and make this quick video. It is Friday, 3:48, Friday, August 9th at 3:48 in the afternoon. We got 12 minutes before the close of the New York session for the week. Just wanted to look at some charts right now, and just for full transparency, just going to show one of my long-term accounts in the ETF. In this particular case, we're not going to look at any individual stocks, but we're going to be looking at the Hack ETF, which is a ETF that focuses primarily on cybersecurity companies. So if we do a quick search, right? Hack ETF. If you think about cybersecurity, you got to think of pretty much it's a important aspect of business that every company needs some sort of cybersecurity aspect to run a business, even though that CrowdStrike, which is a primary business that a lot of people knows about, had a situation a couple weeks ago. You just got to understand that even though that happened, every company still needs cybersecurity to protect their customers, to protect their bottom line. So that's going to be pretty much a foundational piece for a lot of companies to have within. So I feel like cybersecurity is a good sector to focus on. But if we look at the Hack ETF, we can see which which companies are a part of their fund. So okay, these are pretty much the top 10 holdings. As you can see, Broadcom is they're primarily holding, and you see they do have CrowdStrike. 4% is allocated to CrowdStrike, and pretty much can look at all of their holdings if you decide to, if you want to take a look at this. So pretty much ETF is just a pool of a bunch of companies. So in our particular case, these are all of the pool of companies that are tailored in the cybersecurity space, one form or another. Whether it's a government contractor, you can see Northrop Grumman or General Dynamics, or if they actually are a SaaS company, a software as a service company, like Palo Alto, Fortinet, Checkpoint, Cloudflare, CrowdStrike, so on and so forth. So back to the chart. So the way I look at the chart is primarily look at the the weekly chart to make my analysis. So this price here is where my cost basis is, which is 65.37. If we go back here, you can see my average is 65.37, which is pretty much where I'm invested at. So as you can see, price is currently at 63, which means as of right now, I'm in a negative. You can see down 3%, which is not bad. My strategy is a little bit different. I like to dollar cost average, which is buying assets at cheaper prices. As the stock goes down, I'm buying on the dip. So one way I like to look at it is, let's just kind of start it over, right? As we can see, we had this crazy bearish push all the way down, and then we had this push back up. But let's pretty much identify exactly why we had this push up. So we have, I'm gonna just talk about market structure, where you have hold on one second. Okay, so market structure, you have when price is bearish, which means we're going down, you have lower lows, lower highs, lower lows, which is a low that is lower than the previous low, a lower high, which is a high that's lower than the previous high, and then it practically continues, so forth and so forth, right? And then once we get bullish, market structure is we look at price wanting to break the previous lower high. Whereas so we get this, that indicates that price wants to go bullish. So we see this. So we see price go above this area, and price should continue to, like this, go bullish, 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 okay, until it decides to break the previous higher low, and then that cycle continues like that. All right, so in the case of this ETF hack, we can actually look at market structure here. So we see, let's just go here. Okay, you can see you got a higher high. The way I do it is, my higher highs is, there's a candle to the left of it is lower. The candle to the left and the right is lower. Okay, so this marks my swing high, and the same for the swing low. Whereas though we have a candle that is higher on both sides, the lowest point, and this is only considered a higher low once price actually break and closes above the previous swing high, which is, in this case, this candle here. Okay, so once price breaks above, then this is considered higher low. So this is the highest candle, which is, this candle is lower and that candle is lower. So in my eyes, this is the swing high. And then we had another candle that broke above, which is the next swing high. So higher high, higher low, higher high, higher low, higher high. And then on this particular candle, we got a break below, which indicates a trend reversal. Price wants to go bearish. So lower low, higher low, lower high, I'm sorry. Lower low, lower high, lower low. And then, as you can see, we got equal lows here. This isn't, I only consider structure to be broken once we actually get a break below, close below. So this is actually a good indication right here, because, so this is my lower low. As you can see, price went up, retested, and then price went up, retested. But in this case, you see price broke below the previous lower low. But in this particular case, this isn't my new structure. And now if we went lower than this previous candle, then this would indicate to me that this is a lower low. But reason being, because the candle to the left is lower and the candle to the right is higher. We need the candle to the left and to the right to be higher than the previous candle. All right, so this candle here is actually my next low of price structure being broken. So this is the lower high, we got lower low, right? And you can see price was dancing around in between this range, here. So until price decides to either go above or go below, it will determine the next course of action. So as we can see, price was dancing around. Technically we're still bearish because price is still going down. We're considered bearish until price decides to take its previous high. So price is just ranging, making higher lows in the miss, but this doesn't really matter. This is just market structure. This is mini market structure within the overall trend. So a lot of people actually get caught up in these little zone areas. So price actually broke above here. Now you can see this actually indicates because lower candle to the left and to the right. So in my eyes, this is the newer higher high, right? So if we continue, we see that price at this particular point, in my eyes, is bullish. So we got a higher high, equal high, but we don't have a higher low because price hasn't broke the previous high. So price can actually, honestly, price could have did this and then go all the way back down here to break the previous low. It could have did that, right? But it didn't. So we're going to actually get into the play where you can actually get in trade in this particular area. You can trade in these areas too, on these new lows, but we're going to focus on this part here once you actually see price is going bullish. So just continue, and all we're doing is just painting, right? This is the lower low, lower high, higher high, because candle left and right is low. This is the next lower high, higher low. I always get that confusing. This is the next higher low because candle to the left and to the right is higher. And then we got this break above, right? And then boom. So this is pretty much where we're at right now. So let's zone in on this area. Okay. Actually, this is the area that we want to zone in this structure, this green box, because as soon as price broke above here, we can go in on a daily candle. What we're doing is, these are Heikin-Ashi candles. So Heikin-Ashi is just pretty much the average candle. It makes everything looks clean to me. And so if we look at regular candlesticks, right? Once price broke above, we're not focused on any buys until price actually gets back into this green zone, which it did. So once price actually gets back into the green zone, what we're looking for is a engulfing candle, which is a bullish engulfing candle, which is a candle that engulfs the previous candle. So my method is a little bit different. So what I look for is, I look for the low, this candle. So if this candle broke above this candle, I'm entering. But so as we see, we got this is the lowest candle in the zone. This is not the lowest candle in the zone. This is not the lowest candle in the zone. And then this candle, the highest point is 5108. So if this candle closed at 5108 or above, this would have been my buy candle. But this is actually the buy candle because this candle broke up, is above the lowest point, lowest candle in this particular zone. So I would be buying at this candle, and then as we can see, we got another low candle here, and then bullish engulfing. This is my next buy candle, and then price went up, retested the highs, we came back into the zone. I wouldn't focus on this candle, even though this is the lowest candle, and then price close above it. I'm focused on dollar cost averaging for the most part, so I'm looking at candles that actually close below the lowest candle in the zone. So as we can see, price came back in, so I'm holding my hands on my buy triggers. Lowest candle, right? And then price broke above. This is my buy candle right there. So I say all that to say to fast forward, okay, Jermaine, where are we at right now? To excuse me, the Heikin-Ashi, and price made this higher high, higher low, higher high. So now this is the zone that I'm looking for, in between the previous higher high and the previous lower high. So once price actually enters back into the zone, I'm looking for buy signals. So this is the weekly zone, going back to daily, switch back to the regular candles. So what are we looking for, right? So in this particular case, price came back to the zone. This is the lowest point. lowest point, price closed above, I'm buying. Price came back into the zone, it's lower than this one, closed above, that's a buy. Price low, came back in, it's lower, this is a buy. Price came back in, now it's a lower. It's at 60.72. Price closed at 60.77, so this is a buy. The reason I got in here was because I just kind of wanted to have a position, which is why. That's not gonna matter because it's going to change anyway by the time this video is released. So where was that? Okay, so this is actually the buy candle here. And so in this particular case, and this is practically a method that we're going in. Market is closed now, so this trade isn't actually going to go into effect until Monday. We're going to buy $200. Not using the margin on this one. Actually, no, we can. That's fine. Because at this point, the trade is actually around 6%, so it should actually go above the margin payback. So if you want to put 200 in. So Monday, we'll actually buy $200 worth, which is about 3 shares of Hack, and that should actually lower our dollar cost average a little bit low, so should actually bring it down a little bit lower, which makes the room for appreciation that much higher. Okay, so that's actually is my method of me looking at the markets, and let's just, I mean, this is going to be a lengthy video, so let's just do another company, right? Let's just what's an interesting company that people talk about? Nvidia. Alright, let's do Nvidia. Alright, so this is literally just going to be me identifying the charts and what I look at for the most part from scratch. Weekly candle, Heikin-Ashi. So just quickly, I already know the highest high, price broke. What's the lowest point between here and here? Here. This is how I know. In instance, even here. So let's just get on this whole bearish reversal. Right? Because we got and I just would like y'all to just do this yourselves also, because the more practice you have, the better you'll get. So now we're bearish at the price closest below here. This is another interesting, because as you can see, this candle left and right, but since this swing high isn't above the previous candle, this isn't going to be necessary my my lower low. It's going to move there. The price broke above, so at this particular point, it's at 1927. So this candle, so January 30th, 2023, Nvidia officially went bullish. And it was very bullish. There's no pausing as of yet. Got a little pause here. This is the swing low. A lot of consolidation here. Swing high. Price broke above here. Where's the lowest point? Here. Swing high. Price broke above here. What's the lowest point between here and here? Here. Alright. Let's continue. Swing low. Price broke above here. What's the lowest point between here and here? Here. And then this is where we're at now. So now actually Nvidia is at a nice buy zone in between this level. Right. Then what do we do now? We drop down to the daily to identify key buy opportunities, which looks like one actually already happened. Switch to regular candle so we can get, better opportunity to see. Actually, did I buy a video? I did it. Okay. So, as you can see, prices in this zone. This is the lowest candle above. So this is actually, this August 6th was actually a good buying opportunity there, which is about, say, 26% from his previous high, which is actually a nice range, because so you actually can have another opportunity now, since price is still kind of like at its level there. And then another buying opportunity, obviously, as price continue, if price decides to like come down here, go below, above, that's another buy. Go below, above, that's another buy. Even if it breaks, we're going to break. This is how, excuse me, pretty much buying the engulfers on every new lower low. That's what I do for my dollar cost average. So even if we break below here, this will indicate price is actually going bearish. If it happens on a weekly time frame, but still going to be buying the engulfings, dollar cost average now, until it goes up. So for instance, here, when price was officially bearish. So let's just look this up. Actually, we can do a micro replay too. Let's do that. So we can back test this. This is another good thing to do, is to back test. So because, like I said, I don't do trading. I don't day trade. I'm a combination of either swing trading or long-term trading, because you pretty much lose all your money if you're negative. You only lose if you close your position. So we're actually going to see that during this particular back test, right? So just kind of utilizing the opportunities that I was just talking about. And in this particular case, we're just going to buy 2 shares every time. So let's adjust this to 2 shares, right? So every time we get the bullish engulfing, we're going to buy 2 shares. So price went up, came down into the zone. We're monitoring it. This is the lowest candle. So we're waiting for price to close above this candle. Got it. Buy. So monitoring it. Okay. Is it 2089? Prices equal lows. Alright. Buying it. And this point, you're like, oh yeah, I'm good. I feel good. I feel happy. Obviously, you don't know what's going to happen in the future, but this is why I say we swing trade / long-term investing, because you could easily, if you want to swing trade, the easiest thing would be to close your positions at previous highs if you want to swing trade. Okay, we got a new lower. So we're just going low. Okay, bad. Low. We buy. You can see that this is our cost basis. So 2286 is our cost basis now. Where when we buy these new lows, it actually brings our cost basis down. So when price does decide to go up, it will give us better return on investment. New low, new low, new low. Buy. At this point, I kind of already know, because this is the lowest low, highest of the lowest low. Close above that. So now we're monitoring. At this particular point, on a weekly, we are considered bearish in the market structure. Okay, got a low. Okay, high. The lowest low is above. Oh, so you can be as aggressive or conservative as you want, utilizing this method that I use. Buy cost basis is 2095. With this new buy, cost basis is 2032. So you could invest more right now to decrease your cost basis, or you can keep it the same. It's completely up to you and your risk tolerance. I'm just utilizing this method as an example. New low, new low, new low. So when this happens, when price, in this particular case it didn't happen, but if price makes a new low and then close above, that's kind of gonna cancel out, because this is a new low but it actually closed above also. So in that particular case, if this price was actually above this price, we're waiting for the next candle to see if that next candle is actually going to close above this candle. Let's fast forward a little bit faster. Okay. Low price needs to close above there. And it barely did. 1438, 1439, so you can buy that. Cost basis is 1967. 1908 now. New low. New low. See, I almost have it there again. Pretty similar here. So almost, but still in this particular case, if it did close above, this next candle needs to close above that candle. Boom, new low. The lowest low, highest of the low, price close above. Buy. And as you can see, our cost basis is slowly coming down. Low, 1250, 1251. So this is, it's up to you. So technically it's above, so we can buy, which is fine. Below. See, here we go. Now this is what I was talking about. So as you can see, this was the lowest low, and now it made a new low, but actually closed above. So this is actually the lowest low. So price next candle needs to go above this candle. Bet. Okay, and we got it right there. Okay. So since we kind of already know what happened in the future, we're just going to fast forward. But in this particular case, this is our last buy. So we bought summarize. So price was bullish in this case, so we was buying. This price came in, we was buying in the zone, buying in the zone. The price, the stock eventually went bearish. But what are we doing? We're dollar cost averaging. You see, so if we were just buying in here, our cost basis would have been around in the $20 range, but as of right now, our cost basis down to $17.12. So if you want, like I said, if you want to be more aggressive, you personally can to bring your cost basis down further. But this is just only buying using the method of only buying as soon as you see Bollinger Engulfing ticking above the lows. So if we fast forward, now if we want to swing this, you could, like I said, you could take it off here at the previous highs. That's your target. As you can see, we're down $93 with our 26 shares. This price goes on. Excuse me. Now we're up. As time goes on, price goes on. So you could, like I said, if you wanted to, dang, it took, okay, what was our cost basis? 19, I'm gonna have to do it over again. So I bought 26 shares. Oh, $19. Let's just do $19.27 because our cost basis was that. All right. So we're targeting 34.65 if we want to swing trade. If we investing, we're holding on to it until eternity. All right. So you want to flatten out here. So if you did that, you made $511 as a swing trader. Obviously, the money is in long-term trading. As you can see, if you would have held your 26 shares at $19.27 instead of making $511. If we go back here, see price is currently at $104. So just imagine, instead of swing trading to the previous high, which you would have been there, and remember this part too. So we buying when price enters back into the zone. So this is this weekly swing high, weekly swing low. So once price actually broke there, right? Wait for price to come back in. So this is how you can actually get back in to a trade that's actually bullish. And it's the same method. Waiting for price Boom, you got it right there. So you can buy as many shares as you want. On this particular case, just say 5 shares. Right. And again, if you want, you could target. If you want to swing trade, you could target a previous high. But if you want to invest, you want to hold. You're just buying and holding. Swing trading, you gotta have a target. And this only works with critical, not critical, but blue chip stocks. It's not gonna work on any regular stock that doesn't have any type of cash flow. You're not gonna do this on any regular stock, right? So this leads me to this Finviz, which is actually a good site to use to do the screen stocks. So in this particular case, looking at Nvidia, you want to make sure that, obviously they make money. You don't want this to be in the negative. You want them to be a profitable company. So you can actually screen. You can mess around with this stuff, but focus on net profit, obviously positive. So if we do negative, right? You click on this. These are all companies that don't have any, that don't make money. So income negative. Definitely want to focus on companies that don't make any money. If you do that, that's 100% speculative for sure. So this is a good indication, focusing on companies that are net positive. And this is the highest market shares. You can filter that. So you can say you want them to have a return on investment, which should still be all these companies, but this method really only works on companies that make money, and have a high market cap. So honestly, you could focus on all of these to utilize this method, and you should be pretty successful, I would think. Right. So, and that's that. And then this is pretty much exactly where Nvidia is at again. Nvidia is at the level, whereas though it's in the zone there. So you see, instead of making your $511, who the hell right now you would be up $2,500. So that's the difference between trading and investing. When you invest, you actually and hold for the long term. You don't care about the market fluctuations going up and down. Oh, the stock market went down 30%. Nobody cares, because what you're gonna do, you're holding these for the long term anyway. You buying the pressure. You buying the bearish pressure. And if you're down, you're just gonna buy more to lower your dollar cost average, to bring that dollar cost average down, so that when price does rebound and go up, you have more price appreciation. It doesn't have to take forever for you to make money. But yeah, I know this was a very long video. Hopefully it makes sense to you guys. If you have any questions, definitely hit me up. But this is literally the gist. This is everything that I do laid out. This is literally my method of looking at charts and finding opportunities to invest into these companies.